Hello and welcome to another edition of the Forex Technical Market Update for July 6th, 2015. I hope everyone had a wonderful weekend. Everyone uh, who celebrated the 4th of July Independence Weekend in the US. I hope you had a fabulous weekend and and enjoyed the festivities, the fireworks, the food, everything. Okay, over the weekend, what happened? We have been speaking about the Australian dollar, and this is the daily chart of the Australian dollar versus the US dollar. And we see that this area near the 76 level was acting as critical support. And we see that what happened was that the market pierced through the support level and closed below the support level of 76, which is quite bearish for the market. We also see that we had a close on the weekly time frame and also the daily time frame. Now, what is important is to see if we do get follow through selling now that the market has closed below the level. I mean, what sometimes happens, and we saw that earlier this year with the British pound, the market can close below the support point, form a doji, and snap right back up and start to rally. That is definitely something that could happen. So we want to see some follow through selling below this 75 to 74 level with the Australian dollar. Taking a look at this trade we have been speaking about for a long time, the British pound versus the Australian dollar. Naturally, with the Australian dollar breaking down, we also have new highs in this British pound Australian dollar currency pair. And we see that there is resistance at the 208.65 level, and support remains at this channel bottom right here. There it is, 203 level. That's where we have support. About 2 weeks ago, or last week actually, we spoke about the fact that for swing traders, this could be a good swing trade setup here, where the market was in a channel. We got a buy signal, and the market has skyrocketed up to the upside with this currency pair. So that was a very good trade, and depending on your exit strategy, you could still be in this trade. I don't see any reason why a trader should have exited this trade at the moment. But if you're a swing trader, because the market is still making new highs and has momentum to the upside. Now, with the Australian dollar, we said that we said that take a look at gold, and we were saying that if gold does eventually break down, we could see a breakdown with the Australian dollar. Now, gold has not broken down so far, but with Australian dollar making a new low, we have to definitely keep an eye out on this gold market. This is the daily chart of gold, and as you can see, we're still in a pretty strong downtrend with the gold market, and it's lower lows, lower highs, and we didn't have a lower low here, and we didn't have a lower low here, but this could just simply be a triangle in a downtrend, similar to what happened with Australian dollar here. As you can see, triangle in a downtrend, market in a downtrend, it eventually broke down. So we could see that happening in the gold market. Taking a look at the euro, the market did gap down on the weekend and closed below or traded below this trend line here. And we are now retesting the upper portion of this trend line. Trend line got broken. We are now retesting the breakout point. As I said last week, a close below this 108 level would be very bearish for the euro, and that could set us up for a test of this 104 105 region with the euro. Taking a look at the British pound, we did get a close down also, but the market has recovered from the morning, and it's recovering just from the 50% retracement level of the swing low from 151.83 to the swing high of 159.31. Taking a look at the Japanese yen market, Japanese yen versus the US dollar, the market is down somewhat, and it's coming into a support area again. It's coming into our Fibonacci retracement, or 50% Fibonacci retracement. And with the Japanese yen, it's interesting to look at what the monthly pivot point numbers are. I haven't looked on it yet. Let me just shrink the chart. Okay, let me take a look at the weekly pivot point. For those of you who have done or gone through the course, you know that this is a trade setup we look for. Interestingly, we see the weekly pivot point and the monthly pivot point number lining up at this 120.95. So if the market does trade down to this 120.95 area and we do get a buy signal, that would be a good high probability setup. That now, a high probability setup just simply means that the trade is a good probability. There's a good probability that the trade will work. That does not mean the trade will work 100%. Too often folks think that just because you issue a trade or you suggest a trade idea, then 100% of the time it'll work. It will work. High probability means that the odds are in our favor that it will work, but we don't bet our entire trading account on that one outcome, because the greatest downfall of traders is to risk too much per trade and end up blowing the trading account. I will know because I've done it a number of times, and sometimes it takes personal experience for you to learn a lesson, and that was definitely a lesson that I learned very well, that you do not risk too much per trade. Okay, so taking a look at the Canadian dollar, we see that the market is making a new high, and well, not a new high, and it's trading above the high that we were speaking about near this 126 level, and the next area of resistance in the Canadian dollar would be up at this 128 high. So we're going to see if the market can eclipse that 128 high, or the market will stall at this point. Okay, so that's it for this week's edition of the Forex Technical Market Update. If you would like to have the trading signals sent to your trading account automatically, you can click on the link below this video and get started. Now, a common question I receive is, and it has come up over the last week or so again, or I've been receiving many emails about this, so let me just address it. We do not send the signals via email, and the reason is for the signals to be profitable. And I'm speaking about the premium signals here. Okay, in the past, what we have found was that when we send premium signals out to people, what happens? The email will get lost. They may be asleep. They may be away from their computer. Or for whatever reason, they would not receive the signal. And even if they did receive the signal, some folks just the price had gone too far away, and for whatever reason did not take the trade. And if you are doing that, then you are not trading the trading system as it's designed. The trading system is designed to take all trades. It's not designed to pick and choose the trades. It's a complete portfolio, so we manage the portfolio in a very specific way, and it's designed for you to take all the signals. And we have found that when we email out the signals, the premium signals, then all the signals are not taken by the clients, and that leads to problems. So that's why we ensure that the to ensure delivery of the trades, we auto copy them into your trading account. That allows us to deliver on our money back guarantee that states that if after an entire year the trades are not profitable, then you will receive a 100% refund on your Signal subscription. And that's how we're able to ensure that all the trades are sent to your trading account. And that's how we know that we are able to make money, and we are confident with our trades, because we can offer such a guarantee, which I can assure you no other forex company will dare to offer, because there are a lot of folks out there that are not really making any money off of the forex market, and they're speaking about systems, and they are just really glorified coaches, but they do not put their money where their mouth is, essentially, and they will not show you that, okay, what they are doing is profitable. We actually do that for our clients. Okay, enough of that. I hope I addressed that question. To get the signals sent to your account automatically, click on the link below this video, and I hope to see you tomorrow. Thank you very much.